Thank you so much for joining us, Srini. As a senior sales director at HCLTech with deep expertise with the ASEAN market and, of course, digital transformation, Srini, tell us how has the ASEAN insurance sector fared over the last couple of years?
Yeah, so insurance industry in ASEAN region is a very robust one. Within the 9-10 countries that are here, there are about 635 insurance companies, and they are all doing very well. In particular, the non-life insurance industry, they showed a very robust demand, and they are able to grow well. And to support that, they also have seen an increase in the premium rates that they charge. So they are doing very well. And for life insurance, again, they are they had a very bumper year in terms of investment returns. So that increased their profitability, and they also have a very good year. Having said that, there are country specific nuances within the ASEAN region. Like, for example, Singapore is very different from the other ASEAN countries in terms of the GDP and the per capita growth rate.
Yeah.
And similarly, there are also business nuances. For example, in Indonesia, micro insurance is a very huge business because of its affordability and niche products for the SME sector. And in terms of insurance processing, Singapore has a very different way of working, heavy on technology and digital transformation. So while overall the industry is performed very well last year, we also need to consider the country specific nuances which underpin this performance. And in the year to come, the next year, as we all know that there are quite an amount of economic headwinds. There are so much talk about the tariff wars between the developed country, and there is bound to be a downstream impact among the ASEAN region. But
Yeah.
still, we believe that there would be a good growth both for life and non-life sector. And in general, right, insurance growth correlates positively with the GDP growth, because the GDP growth creates demand for products, and which translates into demand for insurance, in particular for non-life. So going by that, for non-life sector at least, countries like Malaysia, Philippines, Vietnam should see a good growth for non-life business. And in addition to the GDP, low unemployment is correlates with the life insurance growth. So
Right.
among the ASEAN region, the countries with low unemployment as well as good GDP growth rate, like Thailand, Vietnam, they should also see a good year for life insurance business.
That's a very interesting perspective, Srini. Given the evolving, economic landscape and regulatory shifts, what are the business challenges insurers are facing in these regions?
Let me start with life insurance sector. Life insurance industry, right? The distribution efficiency is becoming quite a bit of a headache for life insurers, because, like, on the two fronts, one is like the approach of the tied agents, the sales that gets converted. You
Yeah.
can see their proportion is kind of slightly reducing, even though it's a dominant distribution channel. Second is the number of people willing to take agency. That is also not like the years before. So that is one important area that life insurance companies need to address, because it directly impacts their top line. That's a major business challenge. Second is like for non-life and health, basically all insurance companies selling health products. Medical cost inflation is a huge headache. They see the cost for the treatments, the procedures, the hospital stays going through the roof. A good example is in Malaysia.
Yeah.
The costs have gone so much that insurance companies are forced to increase their health insurance premium by 70%, which need not translate into more business, because people may simply stop their insurance policies. So that
Right.
is another challenge that they need to address. And There are some immediate or short-term challenges also. One is like insurance companies face competition from insurtech or smaller players who do not have the legacy technology, who are not constrained by technology debt, and that is one challenge that insurance companies needs to consider. And again, going back to the economic scenario, in case of any downturn in the investment return regime,
Yeah.
insurance companies need to factor that and do proper hedging policies as well. And finally, for non-life, we all know about climate change, and
Yes.
the volatility of climate change brings a high increase in catastrophe claims. So
Yeah.
a single incident or single natural catastrophe can damage the balance sheet of a non-life insurance company. So that is also another challenge.
That's a very critical point you raised over there, from climate change to medical insurance and premium, depending on the region. With these challenges in mind, do you see insurers taking a more proactive approach in risk management and customer experience? What are the technology and operating model trends you see insurers adopting?
Yeah, so these challenges actually directly impact the way the insurance companies operate. So insurance
Yeah,
companies, they used to do rule-based processing. They have moved far ahead in that. They have adopted AI big time. And
yeah,
non-life insurance companies, they tend to collect IoT data and other satellite data for better assessing of risk, better management of risk. So that
yeah,
is one trend that is increasing, and that will definitely increase. And the way you respond to the market challenges also
yeah,
transform your operating model. So as I said, right, when insurance companies are under different cost pressures and different distribution channel pressures, they tend to align their operating model, realign their operating models. But when it comes to from a technology perspective, the impact of technology on the operating model, AI takes the cake. So AI and Gen AI occupies the mind share of every one of the insurance company executives. More than AI, the change in the AI advancement, right? The pace of advancement, it's very, very
yeah,
high. And insurance companies are struggling or grappling to understand the impact of AI, Gen AI on their businesses, and also how to deploy them within their enterprise. So that is a very major impact. And you can see that transform their operating model even within a year or two. It has a very short time horizon. That is one thing. Second thing, coming to the details, right? Uh, One thing is like insurance companies are saddled with legacy systems still, and that
yes,
impacts the quality of data. Quality of data directly impacts the AI adoption by the insurance companies. So once they decide that they cannot avoid AI, then they realize that they have to clean up the data pipelines that they have. They have to do tremendous housekeeping in terms of the data that resides in legacy systems. So that is another trend that we see everywhere. Particularly, insurance companies are heavily investing in data engineering in their IT application landscape. Of course, third technology thing is like Gen AI productization. So, as I said earlier, they are interested in Gen AI. They want to do POCs and all, but the next step is what? So that is another area that insurance companies are worrying. They have moved beyond proofs of concept
yeah.
and looking to deploy it as a part of their existing business process. That is another trend that we are seeing, and that trend is going to increase in the coming year. In the coming year, we are going to see Gen AI deployment as a part of existing process everywhere. That is about technology. From an operational standpoint, right? We see companies trying to cut cost. We are seeing consolidations happening.
Yeah.
We are seeing ODCs, like offshore delivery centers, or
Okay.
in a way low cost delivery centers, because they want to reduce the cost of operations, and also they want to leverage technology in a way which is not possible if they have it in house. That is one. And the second most important trend that I see is regulatory compliance cost. So insurance companies, we see a trend of doing some cost control on regulatory compliance. Earlier, the cost that get incurred for complying all the regulations, they were considered as a given. You can't do anything. You have to incur that expenditure. Now they are taking a relook at the regulatory compliance cost, and trying to find ways to reduce that. That involves outsourcing regulatory compliance as a system, as a service, outsourcing systems that support the regulatory compliance as a service models, and so on.
So interesting trends, and it's so interesting to see again AI and of course Gen AI and all the POCs and
Yeah.
implementation challenges that organizations are going to face. Um,
Yeah.
Tell us, how has HCL Tech helped the Asia insurance to manage these challenges, and adoption related, implementation related problems?
HCLTech is a technology services organization, and it is not just AI or Gen AI that is getting focused on. We approach the industry problems in a much more holistic manner. The main area that we help insurance companies is about the overall technology management. So when I say overall technology management, it is not just about implementing new systems, it is also about managing the existing systems in a much more cost effective manner. And for that, we work on a very, very flexible basis. So we work with the different insurance companies in the ASEAN region, and the engagement models differs according to the risk appetite, the preferred ways of engagement of our clients. Sometimes you'll be surprising to know within the same insurance client, we have different engagement models for different projects. So we are that much flexible when it comes to catering to the needs of our clients. That is one thing. Second interesting area that we see insurance companies utilize our capability is innovation. So innovation is where they want to fail fast. They need some excess capacity and things like that. They want some niche skill sets for a short time. So
Right.
insurance companies have come to realize that that is one very good area to partner with system integrators like HCLTech, because we come with the required technology stack, we come with the required infrastructure capability, and we have the wherewithal to manage the fail fast process. So we work with insurance companies in two ways. One is like we support their in-house innovation labs, and we try to provide the necessary skill sets and capability for them. Second is we also have our own digital innovation labs, where we host and provide a sandbox environment for our clients to try out new innovation ideas. So that is the second most important area. But I want to stress one aspect, which is Gen AI. And
Mm.
regarding generative AI as a technology paradigm, we have developed a framework called AI Force. And AI Force is much more than a single tool or a concept. It provides a holistic umbrella for an enterprise to adopt. It comes with various tools and technologies and accelerators, all on a Gen AI paradigm to improve the overall engineering efficiency. So,
Right.
using AI Force, we have seen our clients improve their SDLC processes, the software development lifecycle processes. We have
Right.
seen our clients improve the testing lifecycle. So, just to give you a quick example, if insurance companies say they have a one-liner requirement, they want to introduce a new product, then they have to just give the product feature into the AI Force. Our
Yeah.
framework can generate the business requirement documents. It can generate the application specific documents. It can generate the test cases and so on. So it all depends on how the model is trained and what is the level of access that is there for the existing applications. That drives the usefulness of the AI framework, and we have seen our insurance clients benefit from that a lot. And beyond that, we also have Gen AI specific insurance use case catalog. So we have developed our own proofs of concept. So we don't wait for insurance companies to think and come up with ideas. We go to them, we say that we already understand your industry. We have this many Gen AI use cases. We have our AI Force framework. So why don't we work together and deploy some of these use cases? Is what we have. And it's a very exciting conversation that we keep having with our clients in this region.
That's great to hear about AI Force and all the generative AI use cases. That brings us to the last question as well, Srini. What are the top three strategic goals Asian Insurance should pursue?
One is like insurance companies need to look at the top line. So for that, they need to look at new business segments. For
Right.
example, for like insurance companies, they need to look at HNIs as a specialized segment, the high net worth individuals, because they expect a differentiated customer experience with better products. So insurance companies can focus on them for additional revenue streams. Another example is embedded insurance. So embedded insurance is where you kind of bundle insurance into another unrelated product or service. It could be a supermarket purchase that you do, and an insurance can be tagged on top of that. The most common example everyone knows is when you buy a travel insurance when you book a flight ticket. So that is a area where non-life companies should focus more. So that is, I mean, exploring niche segments is the first strategic focus area that I would like to highlight. Second is I want to go back to an earlier problem statement that I made regarding increasing medical cost. So it is getting out of hand actually. Uh, the hospital costs, the medical claim costs are exploding across the region. That is on the one hand. On the other hand, the incidence of illnesses is also increasing. And insurance companies, for example, in Malaysia, right, the cancer claims for senior people ages above 50, they have seen a spike actually. Every insurance company report higher incidence of cancer claims from older people. So on the one hand, illnesses increase. On the other hand, the medical treatment becomes unaffordable. So it is also at some point in time it will become uninsurable for the insurance companies. So before it gets to that, insurance companies as an industry they need to work with the governments, the medical industry, and try to find a way. And this should be one of the top strategies for insurance companies. Third is much more what do you call transactional and in-house, which is about efficiency realization. So insurance companies need to focus on tracking of the operational cost. You will be surprised to know with the amount of intelligence available, sometimes even the CXOs they are not very sure whether they are actually tracking all the costs and tracking the cost that they track in a very accurate manner. So that is one area they need to focus much more on to
Yeah.
ensure that the ROI gets realized properly and they are able to control cost in a much better manner. So these are the top three strategic goals that I would give to a insurance company.
Some strong strategic pillars you mentioned over there, Srini. It's clear that insurance need to embrace innovation while staying agile, in a
Yeah.
rapidly changing environment.
Yeah.
Thank you so much for sharing your insights.
Yeah. Thanks for your time, Mosme. Thanks for having me here.